Imagine waking up tomorrow morning and checking your investment account. Instead of seeing a few $1,000s, you see six figures, $100,000. For most people, that number feels almost magical. It's the kind of milestone people dream about for years. But here's what's fascinating. Almost everyone thinks the hardest part is reaching that first $100,000 because it's a big number. That's only half the story. The real reason it's so difficult has almost nothing to do with the amount of money. It has everything to do with how wealth actually grows. Picture two friends. They both graduate college at the same time, they get similar jobs, they earn similar salaries. The first friend spends every raise on a nicer apartment, a newer car, and expensive vacations. The second friend does something that doesn't look very exciting. He saves consistently, he invests every month. He avoids lifestyle inflation whenever he can. For the first 5 years, almost nobody notices the difference. In fact, the first friend looks more successful. He's driving the better car, he's wearing the nicer clothes. His social media makes it look like he's winning. The second friend still drives the same reliable car. He says no to things more often. Some people even think he's cheap, but then something unexpected happens. Around the time his investment account reaches $100,000, everything starts accelerating. His investments begin earning meaningful returns, his confidence grows, his financial decisions become easier, and the gap between the two friends starts getting wider every single year, not because he suddenly became smarter, not because he found some secret investment, not because he got lucky, because he crossed an invisible line that changes how money works. This is something most people never fully understand. Your first $100,000 isn't just another financial milestone. It's the moment when your money starts helping you build even more money. Think about pushing a heavy car that's stalled on the side of the road. At first, it barely moves. You push with everything you've got, every inch feels like a struggle. But once the car starts rolling, something changes. You don't suddenly become stronger, the physics change. Momentum begins helping you. Building wealth works in almost exactly the same way. The beginning feels painfully slow, every paycheck matters, every investment seems too small, every market drop feels personal. It's easy to wonder if you're making any progress at all. But once enough money is working for you, momentum begins to take over. That's why the first $100,000 feels so different from every milestone that comes after it. And by the end of this video, you'll understand why so many investors say the journey to $100,000 is the hardest part of becoming wealthy, and why everything becomes dramatically easier after you reach it. So, what makes the first $100,000 so difficult? Most people assume it's because saving that much money takes a long time. While that's true, it isn't the biggest challenge. The real challenge is that, in the beginning, you're doing almost all of the work. Imagine you're trying to fill a huge swimming pool using nothing but a garden hose. For the first few hours, it barely looks different. You keep checking the water level, but it hardly moves. It's frustrating. You start wondering if it's even worth continuing. Building wealth feels exactly the same. When you invest your first few $100s, the returns are tiny. An 8% annual return on a $1,000 investment is only $80. Even if you have $10,000 invested, an average 8% return is about $800 in an entire year. Nice. Absolutely. Life-changing. Not even close. That's why so many people quit. They don't quit because investing doesn't work. They quit because the early results don't feel rewarding. Our brains are wired to expect immediate results. Go to the gym for a week. You expect to look different. Start a new diet. You expect the scale to move. Learn a new skill. You expect to improve quickly. But investing doesn't reward impatience. It rewards consistency. And that's incredibly difficult in a world where everything else is designed to give us instant gratification. Here's something most people never realize. During the first several years of investing, your monthly contributions matter far more than your investment returns. In other words, you are the engine. Every paycheck, every deposit, every automatic investment. That's what's moving you forward. Your portfolio isn't carrying you yet. You're carrying your portfolio. But something remarkable begins to happen as your investments grow. One day your money earns more in a month than you contributed yourself. Then it earns more in a week. Eventually, it earns more in a single day than you used to save in an entire month. That's the moment many investors describe as a complete mindset shift. Because for the first time, your money isn't just sitting there. It's working. Think of it like hiring your first employee. At first, you're doing every job yourself. You're answering emails. You're finding customers. You're making every decision. Then you hire one person. Suddenly, work that used to depend entirely on you keeps getting done even when you're focused somewhere else. Investing works in much the same way. Every dollar you invest becomes a tiny employee. $1 may not accomplish much. $1,000 accomplishes a little more. $100,000. Now you've built a team that's working every single day, even while you're sleeping. That's why experienced investors become so protective of their investments. They don't just see a balance on a screen. They see thousands of tiny workers generating more wealth on their behalf. And once you start seeing money that way, you'll never think about investing the same way again. But here's the question almost everyone asks next. If the first $100,000 is so difficult, how can you actually reach it faster without taking crazy risks? The answer isn't working 100-hour weeks. It isn't finding the next hot stock. And it definitely isn't getting lucky. It's much simpler than that. So if getting to your first $100,000 isn't about finding the perfect investment, what is it about? After studying the habits of long-term investors, one pattern appears over and over again. The people who reach six figures don't usually have perfect timing, they have better systems. Let's break those systems down. Habit number 1, they pay themselves first. Most people save whatever money is left over at the end of the month. The problem, there's usually nothing left. Successful investors flip the equation. The moment they get paid, a percentage automatically moves into investments before they have a chance to spend it. They don't rely on motivation, they rely on automation, because discipline fades. Systems don't. Habit number 2, they ignore the noise. Every year there's a reason to believe the market is about to collapse. A recession, an election, a banking crisis, a war, a new technology, something always dominates the headlines. Yet despite all of those events, history shows that the stock market has continued growing over long periods of time. The investors who constantly jump in and out usually end up buying high and selling low. The investors who stay invested give compounding time to work. Habit number 3, they increase investments whenever income increases. Imagine you get a $5,000 raise. Most people immediately upgrade their lifestyle. A nicer apartment, a more expensive car, more subscriptions, more dinners out. Wealth builders ask a different question. What if I invested half of this raise before I ever got used to spending it? It's one small decision, but repeated over 10 or 20 years, it can mean hundreds of thousands of extra dollars. Habit number 4, they think in decades, not months. This is one of the biggest mindset shifts you'll ever make. Beginners ask, what will the market do next month? Experienced investors ask, where will the market probably be 20 years from now? One question creates anxiety, the other creates patience. And patience is one of the highest paying financial skills you can develop. Habit number 5, they never stop learning. Notice something interesting. People will spend weeks researching a new smartphone, but they'll invest thousands of dollars after watching one social media video. The best investors stay curious. They read, they learn, they ask questions, not because they need a secret strategy, because knowledge helps them stay calm when everyone else is panicking. And that's what separates long-term investors from short-term gamblers. Now here's the part almost nobody expects. Reaching your first $100,000 isn't just about growing your bank account. It's about changing your identity. At first you think, trying to become someone who invests, but somewhere along the journey, without even realizing it, you become an investor. And once your identity changes, your habits become automatic. You stop asking, should I invest this month? Because investing is simply what you do. That identity shift is worth far more than the money itself. Because once you become the kind of person who can build $100,000, building the next $100,000 becomes dramatically easier. So let's answer the question everyone eventually asks. If the first $100,000 is the hardest, why does almost everyone who reaches it say the second one comes much faster? The answer isn't that they suddenly earn twice as much money. It isn't that they become investment experts overnight. And it definitely isn't because life suddenly becomes easier. The answer is much simpler. For the first time in your financial life, your money starts pulling its own weight. Imagine you're pushing a giant snowball up a snowy hill. At first, it doesn't even feel like a snowball, it's just a handful of snow. Every scoop you add requires effort, every step feels slow. You wonder if it's even getting bigger. But eventually, something changes. The snowball becomes heavy enough to pick up more snow on its own. Now every rotation makes it larger. Every meter it rolls increases its momentum. You're still pushing, but you're no longer doing all of the work. That's exactly what happens with investing. During the first few years, almost all of your portfolio growth comes from your own contributions. You're depositing money, you're making sacrifices, you're skipping expensive purchases. You're saying no when everyone else is saying yes. It doesn't feel glamorous. Sometimes it doesn't even feel rewarding. Then one day, your investment account has a really good month. You open the app expecting to see the small increase you're used to. Instead, you realize your portfolio earned more money this month than you personally invested. That moment changes everything. Because for the first time, you understand that your money has become productive. Think about that for a second. Imagine hearing an employee, on the first day they don't know your business. You spend your own time training them, you answer their questions. You correct their mistakes. In the beginning, they're actually creating more work for you. But after enough time, they become valuable. Now they're solving problems without you. They're producing results while you're focused on something else. Eventually, you can't imagine running the business without them. Money works the same way. Every dollar you invest is like hiring a tiny employee. One employee doesn't change much. 10 employees help a little. 1,000 employees. Now your business is running even while you're asleep. That's why experienced investors stop thinking about dollars. They start thinking about workers instead of asking, "Much money do I have?" They ask, "How many dollars are working for me today?" It's a completely different way of thinking, and it's one of the biggest mindset shifts that separates wealth builders from everyone else. Here's another example. Let's say you have exactly $100,000 invested. If your investments grow by 10% in a good year, that's roughly 10,000. Think dollars about how long it took to save your first $10,000. For many people, it took years. Now imagine your investments generating that amount in a single year, without overtime, without asking for a raise, without working weekends. Now, of course, markets don't return the same amount every year. Some years are fantastic, some years are disappointing, and some years are negative. That's completely normal. The important lesson isn't the exact percentage, it's understanding where the growth is coming from. In the beginning, you're building wealth with your income. Later, you're building wealth with your assets. That's a massive difference, because there's a limit to how many hours you can work. There's a limit to how many promotions you can earn. There's even a limit to how much energy you have. But money doesn't get tired. It doesn't need weekends. It doesn't ask for vacations. It simply keeps working day after day. Year after year. That's why Warren Buffett once compared investing to a snowball rolling down a very long hill. The secret wasn't finding magic snow. The secret was starting early enough and letting the hill do the work. When people say the first $100,000 is the hardest, this is what they mean. You're not just building an investment account, you're building momentum, and once momentum takes over, the journey begins to feel completely different. Now here's the part that doesn't get talked about nearly enough. Reaching your first $100,000 isn't just about doing the right things. It's also about avoiding a handful of mistakes that quietly destroy wealth before it ever has a chance to compound. And the frustrating part, most of these mistakes don't feel like mistakes when you're making them. In fact, they often feel completely reasonable. Let's start with the biggest one. Lifestyle inflation. Imagine you finally get the promotion you've been working toward for years. Your salary jumps by $10,000. You tell yourself you've earned the right to enjoy it, so you upgrade your apartment. You trade in your reliable car for a newer model with a much higher monthly payment. You start eating out more often. Your subscriptions slowly multiply. Nothing feels outrageous on its own. But 6 months later, your expenses have quietly risen to match your new income. Financially, you're almost back where you started. This is why so many people earning six figures still live paycheck to paycheck. Their income grew, but so did their lifestyle. Wealth isn't built by how much you earn. It's built by the gap between what you earn and what you spend. Now let's talk about another trap: trying to get rich quickly. The internet is full of people promising unbelievable returns. This stock will double. This crypto coin will make you a millionaire. This strategy beats the market. It sounds exciting, and that's exactly why it attracts so many people. But real wealth usually looks incredibly boring. Consistently investing every month, owning diversified index funds, ignoring the daily headlines, giving compounding years, not weeks to do its job. It's not exciting, it's effective. Remember this: people who chase shortcuts often end up taking the longest path. The next mistake is waiting for the perfect time to invest. Maybe you're waiting for the market to crash. Maybe you're waiting until you make more money. Maybe you're waiting until the economy feels safer. The problem is that the perfect moment almost never arrives. Even professional investors struggle to consistently predict market movements. History shows that time in the market has been far more important than trying to perfectly time the market. Every month you spend waiting is another month your money isn't working for you. Another mistake that quietly hurts investors is checking their portfolio every single day. Think about it. If you planted a tree in your backyard, you wouldn't dig it up every morning to see whether the roots had grown overnight. Water it, protect it, and give it time. Investments deserve the same patience. Daily price movements are mostly noise. Long-term trends are what matter. The more often people watch every tiny market movement, the more likely they are to make emotional decisions. And emotional decisions are expensive. Then there's panic selling. Every market downturn feels different when you're living through it. The news makes it sound like this time is different. Friends tell you to get out before it's too late. Social media is filled with fear. Selling feels safe. But history has shown something remarkable. Every major market crash has eventually been followed by a recovery. Sometimes it takes months, sometimes it takes years. But patient investors have repeatedly been rewarded for staying invested. The people who build wealth understand that volatility is not the same thing as permanent loss. Price movements are temporary. Ownership is permanent unless you choose to sell. Finally, there's one mistake that almost nobody notices until much later: comparing your journey to someone else's. Maybe your coworker bought a luxury car. Maybe someone online claims they made a fortune trading options. Maybe your friend seems to be getting rich much faster than you. Comparison creates impatience, and impatience creates bad financial decisions. The truth is, you rarely see the full picture. You don't see the debt, you don't see the stress, you don't see the risks they're taking. The only journey that truly matters is your own. If your investments are larger today than they were a year ago, if your habits are stronger, if you're becoming more disciplined, you're already moving in the right direction. Building wealth isn't a race against other people. It's a commitment to becoming slightly better every single year. Because the people who eventually achieve financial freedom aren't usually the smartest people in the room. They're the ones who simply refuse to quit. And that brings us to perhaps the biggest transformation of all: the moment you stop seeing yourself as someone trying to build wealth, and start seeing yourself as the kind of person who naturally creates it. So after everything we've talked about, I want to leave you with one final idea. Because I honestly believe this is the part that changes everything. When most people imagine reaching their first $100,000, they picture a bigger bank account, they picture security, freedom, maybe even success. But that's not the biggest thing that changes. The biggest change is you. Think back to the person who started this journey. Maybe they felt overwhelmed by investing. Maybe they thought building wealth was only for people who earned huge salaries. Maybe they believed they had started too late. Or maybe they simply didn't know where to begin. Now compare that person to someone who has spent years investing consistently. Someone who automatically invests every paycheck, someone who understands compound interest, someone who isn't shaken by every scary headline on the news. Those are two completely different people. And that's why your first $100,000 matters so much. It isn't simply proof that you've accumulated money. It's proof that you've developed the habits required to build wealth for the rest of your life. The money is just the scoreboard. The real prize is the person you've become. Here's something that took me a long time to understand. Building wealth is rarely about making one brilliant financial decision. It's about making hundreds of ordinary decisions that nobody notices. Choosing to invest instead of impulse buying, choosing patience over excitement, choosing consistency over perfection. Doing those things once won't change your life, doing them for 10 years absolutely will. People often ask successful investors what stock made them rich, what strategy changed everything, what secret they discovered. The truth is usually much less exciting. They simply stayed in the game longer than everyone else. They kept investing when the market was boring. They kept investing when the market was scary. They kept investing when friends told them it wasn't worth it. They understood something that many people never do. Consistency beats intensity. You don't need one perfect year. You need many good years stacked together. Imagine planting a tiny oak tree today. Tomorrow it looks exactly the same. A month from now, almost nothing seems different. Even after a year, it's still a small tree. But come back 20 years later. That tiny tree has become something massive, not because it grew quickly, because it never stopped growing. Your investments work exactly the same way. Small progress doesn't feel exciting until one day you look back and realize just how far you've come. That's why the first $100,000 feels impossible while you're chasing it. But once you finally arrive, something surprising happens. You stop obsessing over the number instead. You start trusting the process. You realize wealth isn't created by one lucky investment. It's created by thousands of disciplined decisions quietly working together over time. And that's a lesson that extends far beyond money, because the same consistency that builds an investment portfolio, builds a healthy body, builds strong relationships, builds successful businesses, builds an extraordinary life. The habit of showing up, even when progress feels invisible, is one of the most valuable skills anyone can develop. So if you're still working toward your first $100,000, don't get discouraged if it feels slow. It's supposed to feel slow. Remember the snowball, remember the stalled car, remember the tiny oak tree. Every one of them looks insignificant in the beginning, until momentum takes over. One day you'll check your investment account. You'll see six figures staring back at you. And you'll realize something unexpected. The biggest investment you ever made wasn't in the stock market, it was in yourself. Because every dollar you saved taught discipline, every market downturn taught patience, every monthly contribution built confidence, and those qualities will continue paying dividends long after your portfolio reaches six figures. So start where you are, invest what you can, stay consistent, ignore the noise, trust the process. Because your first $100,000 isn't the finish line. It's the moment your financial life begins to work with you instead of against you. And years from now, you'll look back at this moment and realize that becoming wealthy was never about getting lucky. It was about becoming the kind of person who refused to give up. If you found value in this video, make sure to subscribe for more videos on investing, personal finance, and building long-term wealth. And I'd love to hear from you. What's your biggest financial goal over the next 5 years? Let me know in the comments below. Thanks for watching, and I'll see you in the next one.